During our stock analysis, we are going to explore the key pillars, examine the ownership, look back at past results. We will find out what the analyst predictions are, as well as give the business a valuation, and examine the potential return on our investment. And finally, we will summarize our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests these are the key metrics when first evaluating a business. The first pillar we are going to explore is earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. For Amazon, this is 22%, and is a fantastic increase from last year. Now, let's look at the free cash flow, which is the money a business can generate from its operations. And here we can see Amazon have made some significant gains, as their free cash flow is up 34%. Then we come to the next pillar, which is revenue. And this tells us how good the company is at generating income before deducting expenses. Amazon's revenue has only increased by 1% in the trailing 12 months. Then we come to book value, which is calculated by subtracting the total liabilities from the total assets, and this indicates equity growth for the company. So, as for the last 12 months, Amazon's book value is 6%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and return on equity. These two measures allow us to assess a company's efficiency at allocating the capital under its control. Return on invested capital and return on equity is a very respectable 11% and 17%. Now we move on to debt. And Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. So, using their current free cash flow, they could pay the debt off within 3 years. In this next section, we now focus on other key metrics which help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. This is currently 48%, and this is very good, as we would like to see the gross margin over 40%. Next, we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying interest or tax. Their operating profit margin is 8%, which is a little under the ideal 14% we would like. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for companies which have a free cash flow yield of 5% or higher. So, at 2.57%, this looks fairly solid. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. This is 23%, with the lowest point being this year at 6% for the trailing 12 months. And lastly, Bill Miller believes earnings growth is the biggest indicator to a company's stock price. The average growth for the last 5 years is minus 232%, but this is directly attributed to various factors, such as increased operating costs and investments in new ventures. And the market dip of 2022. In the comments section, I've included a link to the investors page in the annual report, if you want to check him out. This is Bitesize Investments, giving you a step-by-step approach on your investment journey. There are currently 12 super investors who own this company, and between them they invested $1.1 billion in Amazon in Q1 of 2024. If we look back at Ray Dalio's previous sales and purchases, we can see he has both bought and sold shares in Amazon in the past few years, and has added Amazon back into his portfolio in Q1 of 2024. He now has $1 million invested in Amazon, and this makes up about 1% of his overall portfolio. However, 13 other super investors have sold shares, totaling $1.4 billion in Q1 of 2024. Jim Simons has previously bought Amazon shares, but in the last quarter he sold 546,000. He sold 12.7% of his shares, but still has $687 million remaining in the company, which is 1.11% of his overall portfolio. Now we are going to look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that from 2014, Amazon have been steadily growing year on year, up until 2022, when the whole market dipped, but now have made an incredible recovery, and have continued to grow. On average, the analysts believe that the price target should be about $211, but some believe it can go as high as $250. Analyst reports suggest that Amazon is fairly valued at the moment, and the overall consensus is Amazon is a strong buy. Collectively, the analysts believe the company will grow between 17 and 60% over the next few years. I will use the current earnings per share of 3.53 as my starting point when creating a valuation. based on a combination of the past growth, future analyst predictions, and the average book value for the past 10 years, I am going to estimate the earnings per share growth to be 20%. Then, I am going to give Amazon an estimated PE ratio of 40. After that, I will project these numbers forward by 10 years. We then need to include a 15% return from our investment. This then gives me an estimated future stock price of about $875 per share for its future share price. And work out the current value that Phil Town calls the sticker price, which is about $216. Then we apply a margin of safety. At 25%, it gives me a buy price of about $162. However, unless there is an event or correction to the market, it is unlikely to hit this target. Although, it may hit April's dip of about $175. As we can't rely on just one valuation model, I'm going to dig a little deeper and gather some more information. If you found this video useful, please consider giving it a like, or click on the link above to check out my last stock analysis, or continue to watch as we are going to look at the possible return, and compare the bull and bear cases. The return we would receive, if we bought at our 25% margin of safety price of $162, and sold in 10 years' time at our estimated future stock price of $874, would be 440%. But, this is dependent on our assumptions for the company being correct. At the moment, Amazon don't provide a dividend. Let's find out more about the company and its competition. According to Morningstar, Amazon has a wide economic moat. And this is because they have strong revenue growth through their different business segments, such as e-commerce and cloud services. Amazon remains a market leader in the cloud computing market, and this segment of their business is contributing significantly to their profitability. During the market dip of 2022, Amazon spent time implementing cost-cutting measures, which have now improved their profitability. These measures include optimizing logistics and reducing the operational costs. Now let's look at the bear case. Amazon face increasing competition from e-commerce giants, like Walmart and Alibaba, as well as from cloud service providers like Microsoft, Azure, and Google Cloud. Amazon is under significant regulatory scrutiny in various regions, which could lead to increased compliance and potential fines. There have also been concerns about declining consumer satisfaction, which could impact Amazon's brand and customer retention. If you have enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now, we'll summarize what we have found out about the company. When reviewing the key pillars, Amazon scored 8 out of 12. Under ownership, 12 super investors have bought in the last few quarters, and 13 have sold shares. Their average share price is in an upward trend, and analysts are indicating Amazon is a strong buy and they are predicting they will grow between 17 and 60%. Using the EPS growth model, my personal buy price would be $162 or less. If you click on the link above, you can find out about my personal portfolio. According to Morningstar, Amazon have a wide moat, and my final overall rating is 4.5 out of 6 stars, and I have given this a category A rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comments section to help me develop the content I'm creating.